BlackRock Incorporated is not just the world's largest asset manager. It is a financial titan that wields unparalleled influence across global markets, governments, and the broader economic landscape. With over $9 trillion in assets under management, AUM, at its peak, BlackRock has established itself as a dominant force in passive investing, exchange-traded funds, ETFs, risk management, and financial advisory services. The firm was founded in 1988 by Larry Fink, along with a group of partners, as a risk management and fixed-income asset management company, and since then, it has expanded exponentially, growing into a behemoth that touches nearly every aspect of the financial system. One of BlackRock's most significant innovations is Aladdin, asset, liability, debt, and derivative investment network, its proprietary risk analysis and portfolio management software, which is widely used not only by BlackRock but also by other institutional investors, pension funds, sovereign wealth funds, and even central banks. This technology has made BlackRock indispensable in the financial sector, as Aladdin helps institutions analyze financial risks, assess market trends, and optimize investment strategies, making it one of the most powerful tools in modern finance. The company's dominance in passive investing through iShares, its ETF division, has also reshaped the investment landscape by making low-cost, diversified investments accessible to millions of investors globally. ETFs have become a preferred investment vehicle for both retail and institutional investors, and BlackRock, through its iShares brand, controls a significant portion of this market, further solidifying its grip on global capital flows. At the helm of this financial juggernaut is Larry Fink, a man who has become one of the most influential figures in global finance and corporate governance. Born in 1952, Lawrence Douglas Fink grew up in California and later attended the University of California, Los Angeles, UCLA, where he earned a BA in political science and an MBA in real estate. His early career began at First Boston, where he made a name for himself as a pioneering figure in the mortgage-backed securities, MBS, market. However, a significant miscalculation in interest rate predictions cost First Boston hundreds of millions of dollars, an experience that deeply shaped Fink's risk-conscious approach to investment management. This failure became a turning point for Fink, pushing him to create a company that would place risk management at the core of its operations. Thus, BlackRock was born. Since then, Fink has built BlackRock into a financial colossus, steering it through economic downturns, market crashes, and financial crises, including the 2008 financial meltdown, when BlackRock played a crucial role in advising the U.S. government and Federal Reserve on stabilizing the financial system. His firm was instrumental in managing the toxic assets from the crisis, working closely with policymakers to restore confidence in the markets. In recent years, Larry Fink has become a major advocate for corporate sustainability, environmental responsibility, and long-term value creation, setting the tone for how companies should operate in the 21st century. His annual letter to CEOs has become a widely anticipated document in the corporate world, in which he urges business leaders to prioritize stakeholder capitalism over short-term profit-seeking. He has repeatedly emphasized that companies must address climate change, social inequality, and governance issues, ESG, environmental, social, and governance factors, to ensure long-term growth and stability. Fink's focus on sustainability has made BlackRock a leader in ESG investing, influencing corporations worldwide to integrate climate risk considerations into their business strategies. However, this stance has made Fink and BlackRock a controversial target in political and financial circles. On the one hand, climate activists and progressive policymakers argue that BlackRock does not do enough to curb investments in fossil fuels and that its ESG policies are more performative than substantive. On the other hand, conservative politicians and business leaders have accused Fink of pushing woke capitalism, claiming that BlackRock's emphasis on ESG investing is an ideological overreach that undermines shareholder value. Some U.S. states, particularly those with large fossil fuel industries, have pulled their pension fund investments from BlackRock, citing what they see as undue pressure to comply with environmental and social policies that contradict their economic interests. Despite these criticisms, Larry Fink remains one of the most powerful and respected figures in finance, with his company playing a crucial role in shaping the global economic landscape. BlackRock's advisory role extends far beyond the private sector, as it provides counsel to central banks, sovereign wealth funds, and government institutions worldwide. It has advised the European Union, China, and multiple developing nations on financial policy, further solidifying its influence over international economic affairs. Some critics argue that BlackRock's sheer size and influence pose a systemic risk to the financial system, as its vast holdings and investment decisions can sway markets, influence government policy, and reshape industries. Additionally, there are growing concerns about the concentration of corporate ownership, as BlackRock, along with fellow asset management giants Vanguard and State Street, owns significant shares in nearly every major publicly traded company in the U.S., effectively giving them outsized voting power in corporate decisions. This has led to debates about the role of asset managers in corporate governance and whether firms like BlackRock should be more heavily regulated to prevent conflicts of interest and excessive market concentration. Under Fink's leadership, BlackRock has continued to expand its footprint in emerging markets, investing heavily in technology, private equity, infrastructure projects, and alternative assets. The firm has also pushed for greater adoption of artificial intelligence, AI, and data-driven investment strategies, recognizing the transformative potential of AI in asset management. As global financial markets continue to evolve, BlackRock's ability to adapt to shifting economic conditions, geopolitical risks, and technological disruptions will determine whether it maintains its position as the world's most powerful financial institution. Larry Fink, now in his 70s, has shown no signs of slowing down, though succession planning at BlackRock has become an increasingly relevant topic, given the firm's reliance on his leadership and vision. Whether or not Fink remains CEO in the long run, his legacy is already firmly established. He has transformed BlackRock into an indispensable pillar of the global financial system, redefining the role of asset managers and leaving an indelible mark on modern capitalism.